Okay guys, I'm really excited actually today. In this video, we're going to be doing a deep dive into specific numbers for the overall Australian property market and specific cities, okay? Giving you the history of their growth, other trends, the data, what it's saying, what it's suggesting about the future. You can see I've got one slide already in front of me. We'll go through many slides today, probably about 15 or so. So hopefully this adds a ton of value. If you're building your knowledge about the Australian property, real estate market, then, there's probably no better video than this. Okay, guys, my name's PK, and I help literally hundreds of people build passive income through property investment, using data without needing to draw $15,000 on a buyer's agent every single time. This channel exists to help you guys get ahead through Australian real estate. So if you do want to get some financial security, some wealth, some financial freedom, you could say, through property in Australia, then give it a subscribe, turn the like button on, and turn the notification bell on. Okay, so let's get into it. As you can see here, so I'll be running through about 15 slides real quick and giving you my observations. And by the way, all this data is from CoreLogic. They're great over there. So the key thing that I wanted to take out of this slide was that you can see that the residential real estate market in Australia is far, far, far bigger than even the Australian superannuation system. Now, everyone's required to contribute to their super, but real estate is 2 to 3 times bigger. What to speak of the stock market? The stock market pales in insignificance when it comes to its relativity versus the Australian residential sector. And commercial real estate, still large, but once again, very, very small. And what you can see down here is that the majority of Australians' wealth is tied up in real estate, in housing, more than 50% of it, right? So the key takeaway from me, or from my observation from this slide, is really to say that whatever happens, a war, COVID part 2, 3, 4, 5, 10, interest rates going up, debt, whatever you might think of, the government will not let the Australian housing market collapse. Now, I can't predict the future, all right? I'm not a magician or anything like that, but these statistics tell me it's almost like the US banking system, 2007, 2008. The Fed over there, they didn't let Freddie Mae, Fannie Mac, all these big banks, JP Morgan, Morgan Stanley, they didn't let them collapse. They only tested the waters with Bear Stearns and one or two others, but there's this concept called too big to fail. If there is a 30% correction in the Australian residential real estate market, then that 9 trillion, I should say, comes back to about 6 trillion. That will destroy the livelihoods of Australians, the economy. The government will always be seen to be the worst sitting in history. That will, in my opinion, my humble opinion, that will never happen. Let me know what you think though. The next slide I want to go through. So the takeaway here, well, the heading here, Australian dwelling values, they rose by about 6% in the last 3 months through to July. And the previous 3 months, they rose 7%. So the rate of rise is certainly cooling down, okay? The rate of rise is certainly cooling down. You can see that the rolling quarterly change in dwelling values, historically it's always been positive. We saw that the last boom ended around 2017, which I've been talking about a lot in recent videos. And now this has spiked up again, 2019, and really that would have continued had it not been for COVID last year, and then really all the stimulus has urged property prices to go up again. And one key takeaway I want you guys to really understand is that this Australian figure, 5.9, you can see regionals are performing just as well as capital cities. And in fact, this has been the case for like the last five years or so. So it's not a COVID phenomenon. If you think that you have to buy capital cities, absolutely not true. And you can see here that it's really only regional Western Australia that is going backwards in value. Everything else is doing super well. Obviously, some areas better than others. So you can see regional Tassie is still growing faster than most other places. Regional New South Wales, regional Victoria, regional Queensland. If you're looking to invest in the property market, I really, really, really want you to. I mean, I don't have a bias towards regional, but I really want you to absorb these numbers and just see the states where the regional property markets are doing better than others. And when you see capital cities, when you compare the numbers to, let's say, regional New South Wales, which includes places like Albury, Wodonga, Orange, other places like that, they're not too far behind from Sydney, right? This is obviously the quarter and on a percentage basis, but you can see that the good regional cities or areas have been performing just as well as the capital cities. But I'll go on to the next one. So looking back to the last 12 months, overall dwelling values rose 16%, not surprising. This was the fastest they grew on a yearly basis, since 2004, which was really the beginning of the last boom. The last boom really started around 2013-14, went till about 17. Big takeaway, I really want you to understand, everyone thinks that it's huge growth that we've had, now it's time for a correction. The reality is, check this out, 2014, this is really, you saw this kind of growth pattern here. That growth pattern continued. The boom lasted till 2017. Typically, booms in Australia last for about 2 to 4 years. On average, you could say 3. So I just, once again, want to reiterate this fact that just because we've had a huge year doesn't mean that, for some statistical reason or mathematical formulaic consequence that we're due for a downturn. That's not a case. That's not the case, and the history proves that. And over the last 12 months, once again, I really want you to take your eyes here to my mouse over here. Regional Tassie, around that Burnie area, has done better than almost anywhere in Australia except for, you could say, Darwin. Over here in New South Wales, it's plain to see. If you want positive cash flow property, you're going to get it in regional Tassie, you're going to get it in regional Queensland, you're going to get it in regional Victoria, you're going to get it in regional New South Wales. And by the way, all of these have performed basically just as well as any capital city, including Sydney. Everyone thinks that Sydney's grown the most. Well, actually, Hobart, Darwin, Canberra have grown more on a percentage basis. And really, your opportunity in the big capital cities for positive cash flow is you're around this Adelaide, Brisbane, and Perth. Perth is, I'll talk about Perth in a second, but let's go into the next slide. So in the 3 months up to July, the top 25% of values continued to lead growth across the capital city markets. What this is saying effectively is that the houses that were more expensive or above the 75th percentile in terms of value, they have really been leading the charge. This is really important for you to understand. I want you to connect with this point. In any boom, in every boom, the top end of town always leads the charge. It just is like that for some reason. I don't know exactly why, but it just is. The top end of town, the more expensive properties, $800,000 plus, $1 million plus, $1.5 million plus, they lead the charge. And everyone, the media starts reporting boom, 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 but actually there retains or remains value in the 25th percentile properties, in the 50th percentile properties, as you can see, in Sydney, in Melbourne, and Brisbane, and Adelaide, except for Perth. Really in these 3 big capital cities or 4 big capital cities, even though prices have risen a lot, they've been skewed or weighted because of the top end of town. Actually, the bottom end of town, you're in Adelaide, for instance, you're talking sub $400,000. In Brisbane, you're talking sub $500,000. And Melbourne and Sydney, you're talking, sub $800,000, $900,000. There still remains some value. Those areas haven't grown as fast as the top end of town. So it's really important to use what we call a hedonic approach or a really fragmented approach in analyzing property data, because whole cities don't grow the same. The suburbs that are more expensive have been growing faster, which means that the quote-unquote cheaper suburbs, there's value there and they're due to catch up. They always catch up. It's not that more expensive properties grow faster over the long term. Actually, everywhere grows pretty much the same over the long term. We just need to see where we are in that pendulum, in that cycle. And right now, the most value is in these light gray and blue areas, obviously. Perth is a bit of an exception here, and I'll get to Perth in a second. All right, so hopefully that was interesting. And the next one is the current cycle continues to be fairly synchronized across the capital cities, with quarterly growth rates now slowing in most dwelling markets. So what they're saying here, or what this chart is saying, is basically all capital cities have been growing. It's not that one has been growing and another one hasn't. They've all been fairly synchronized. But what I want you to really look at in this left-hand side chart is Sydney has led the charge. So if you're thinking about buying in Sydney now, especially if you're in the kind of 50th or 75th percentile properties, you kind of miss the boat. Like, that's kind of the reality. This chart kind of illustrates that. But whereas if you're in Brisbane, Adelaide, Melbourne to some extent, what this chart is saying is that property prices have been synchronized, but they haven't really grown as much as Sydney. There's still more upside in those capital cities than Sydney. Perth is a really interesting one. Don't be fooled into thinking this declining curve means that prices are dropping. Anything above 0% is still an increase. So Perth is really where I think most of the value is, but it's a very... there's markets within markets in Perth. You need to be very careful where you buy in. There's less opportunities in Perth than you could say in Brisbane. Okay, so that's really that, and you can see here on the right hand side, I don't know why they've created a separate chart for this, but Hobart, it's just going gangbusters, even better than Sydney. Sydney 7.7, Hobart 8.2. So guys, it's not professional advice, not personal advice, but you're a bit late on Hobart. Best time to buy there was about 3 or 4 years ago, which is when most people who knew what they were doing were doing. Canberra continues to go well, and I think one of the things that's not on this chart is Canberra yields continue to keep pace. Of course, you need to pay land tax in Canberra, which dilutes yields, but yields have been really keeping pace in Canberra. So I think there's plenty of upside in Canberra. Darwin, has been increasing, but it's a very, I don't want to say one-trick pony, but it's highly leveraged to one or two industries. So a little bit on the riskier side. Guys, if this is bringing you value, tell me. Hit the like button, turn the subscribe button on. Tell me if this is adding value by those ways. And the next one is, before we go into city by city, I'll just go on this slide. So what this is saying is that actually the combined capital cities affordability index, you could say, is going down. So this is the affordability index, or the home value index, and effectively it's just saying that this is March all the way to July. Affordability is really starting to come down. But once again, looking at these charts is all interesting, right? But it's heavily skewed by Melbourne and Sydney, which have been growing really well. So you can't just say, oh, look, things are becoming unaffordable, let's not buy property. There's markets within markets. Now let's go into individual cities, guys. So let's start with Sydney. So, you can read this stuff on the right-hand side yourself. The key takeaway that I just want to illustrate was that property prices have been growing on a quarterly and an annual basis faster right now in Sydney than the last boom, kind of 2015, 2016. So I don't think that's sustainable. I don't think that can go on for too much longer. If you live in Sydney, you want to buy a property, really, 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 really do your homework, which is different to what I would be suggesting if you're living in Brisbane or Adelaide or Perth or somewhere else like that. In Melbourne, you can see that the quarterly change is, significantly strong, but the annual change is still a little bit subdued compared to the top of the last market. So, it's still got this last market, started at 5%. Actually, it started all the way in 2014, but this chart starts in 16, went up. Prices were still increasing, all the way to about end of 2017, start of 18. So that's 2 years just on this chart. This trend has started now just for less than a year, and COVID has affected it. So it's hard to say what will happen in Melbourne. My view, if you're investing in Melbourne, is it's pretty high risk at the moment. The economy is buckled under the restrictions and sanctions and everything like that. I think there are better places to buy markets within markets, but that's my view. Brisbane, I mean, this is great. This is such a good chart. What this is saying is that one thing, property prices have not really grown that much in Brisbane, in the last 5 years. And you might say, well, doesn't that mean property prices won't grow in the future? Absolutely not. Previous growth is not a predictor of future growth. And so really you're still, relatively speaking, buying at the bottom of the market. If you're looking in the Hills District or Inner North, kind of 10, 15 Ks north of the city in Brisbane, you're probably thinking PK, it's definitely not the bottom of the market. Property prices are increasing pretty fast, relatively speaking, compared to the last, or compared to other capital cities, you're still at the bottom of the market. So I think there's plenty of opportunity. In Brisbane, you can see, I mean, Brisbaneites love to see this because we haven't had a property boom for a decent 10 years, I'd say. Adelaide is a very similar story. I think we would have bought more than 200 properties just in the last 2 years in Adelaide, and you can see how the data, what we were following, my clients were following, has really come to fruition. You can actually use data, guys. I just want to make this point. You can actually use data to buy in a suburb within Adelaide, in the right suburb, in and around 2019 to 2020. It's predictable. You can actually time the bottom of the market. And for all of my clients that are watching, thank you for watching. But you know who you are, and congratulations for buying last year, and congratulations for buying so far this year. Perth, once again, everyone is fearful, or a lot of you are fearful of buying in Perth because of this thing, right? None of these other charts that I've gone through have had negative growth on such an extended period or extended basis for the last 5 years. Perth has only just started growing last year, right? But once again, one way to interpret that is that it's smack bang in the bottom of the market, and it's actually consistently growing. So many of you may think that Perth isn't growing, it hasn't grown, it won't grow. Reality is, it is growing, not only on a quarterly basis, but also on an annual basis, right? And don't be fooled by this sort of last 1, 2, 3 quarterly change, blue bars kind of coming down. There's a level of seasonality. Winter is typically a softer month for property, or softer season for property markets. So I would expect coming into spring, coming into summer, that these blue lines would continue to go up again. Hobart, I mean, this has been the poster child. I think we started investing in Hobart against all popular opinion around 2015, when everyone was saying just buy more in Sydney or Melbourne, especially 16. But on a percentage basis, you would have made way more money if you invested in 2016 in Hobart than if you did even buying in a place like Bella Vista in Sydney on a percentage basis. So, I mean, you can see that this extended boom, it kind of mellowed out 2019 with APRA, Prudential Regulatory Authority restrictions, with the Royal Commission. I talked about that in the last video. But it's got this second steam, and it's faster than ever. I don't think Hobart is going to continue like this forever. I don't think that individual suburbs can sustain this level of growth. Yes, there's a lot of infrastructure going in and around Launceston, Hobart, regional, Tassie. But if you're buying in Tasmania right now, you need to admit to yourself, whether you like it or not, that you're buying at the top of the market. It might continue to go up. It probably will, actually. The data suggests it will. But there, like I mentioned before, regional Victoria, regional New South Wales, Brisbane, Adelaide, Perth, regional Queensland, especially, many, many better opportunities buying at the bottom of the market than in places like Hobart, where you've seen such huge gains. It's probably in a year or two, Hobart will have another 5, 6, 7 years of sleep. And then Darwin. I mean, Darwin's got a very similar trajectory back here to a place like Perth. It was actually worse than Perth, and it's gone up again. You don't just look at these lines and invest blindly, guys. I really want to, because I care, I really want you to understand what's driving these price rises. Darwin's LNG projects, INPEX, and all this sort of stuff, they're not really requiring that much more labor or FIFO workers than 4 or 5 years ago. It's ticked up a little bit with commodity prices rising, but just as easily they could come back down, and that's the biggest risk for Darwin. Just not enough diversification in my mind. Even places like regional in regional New South Wales and Victoria, places like Ballarat or Bendigo are actually more diversified in their economy than Darwin. So you kind of have to think twice before going to Darwin. And ACT has been a bit like Hobart. Huge booms for the last 4 or 5 years, kind of mellowed out when You know, interest rates were kind of on the way up almost in 2019. All sentiment was cooling down, and then once again, pressure started. You can see here as well as I've gone through these charts. It's not that COVID and the government stimulus has risen property markets. The rise has been from all the way 2019. All right, so there's genuine fundamentals for why this property market is growing. So guys, there are so many more charts that I want to take you through, but I want you to tell me if you want me to take you through them. So if you enjoy this format, this structure of video where I'm sharing my screen, taking you through the data, if you want part 2 where I take you through all these other slides that I haven't taken you through yet, then I want you to tell me. I want you to leave a yes below in the comment section. So right now, hit the comment section, open it up on your phone or on desktop, leave a YES, and if I get enough yeses, then I'll take you through another 20 slides of just pure, nectarian data. I'm a bit of a nerd. I'm sure you guys are too, because you've watched all the way to this part of the video, all the way to the end. But guys, tell me if you want me to do a part 2, this is potentially part 1. We can dive into much more granular detail, city by city, town by town, talking about different angles of vision, different dimensions of the data. This was a deep dive right here. We can go even deeper. Leave a yes below if you like this kind of data-centric view to property investing. All of this data in these charts are from CoreLogic. Guys, I don't think many people actually understand the data, so I'm just trying to bring some value to you in a slightly different way. Guys, if you enjoyed it, hit the subscribe button, turn the notification bell on, and give it a thumbs up. And there'll be links below to my podcast, to the Facebook group. There's almost 10,000 people in there now. So if you want to step up your learning and be a bit more interactive, get to know my clients, where they're buying, all that kind of thing, then the links are right below. And always remember, the most important real estate is actually the 6 inches between your 2 ears. So educate yourself and you can get ahead through Australian real estate. My name's PK. Catch you later, guys.